Mortgage rates barely budged this week, stuck at 6.04%, even though inflation came in cooler than expected. The December CPI report should have triggered a rate drop, but it didn't. Here is why that paradox matters for your rental property finance. $200 billion aftershock. Why lenders hit the brakes? Here is what shocked the market this week. Rates stayed frozen near 6% despite improving bond market conditions because lenders were drowning in applications from the prior week's rate plunge. When the national 30-year fixed mortgage rate crashed to 3 years low at around 6.01% on January 9, thanks to that surprise announcement of $200 billion in mortgage-backed bond purchases, refinance applications surged. Lenders responded by holding rates slightly above where bond markets justified just to manage the flood of the business. This capacity constraint explains why the 30-year fixed rate only rose 3 basis points from 6.01 to 6.04% between January 9 and January 15, staying essentially flat despite frenzy under it. The inflation paradox, cooler CPI, frozen rates. But wait, there is more to this story. The December Consumer Price Index report dropped on January 13, showing core inflation rose just 0.2% month over month and 2.7% year over year. Both readings came in 0.1 percentage points below what economists expected. That is the kind of data that normally pushes treasury yields down and mortgage rates with them. But because the Fed had already delivered 3 rate cuts in late 2025 and markets weren't pricing in another cut until around June 2026, the cooler inflation number just reinforced the higher for slightly longer narrative rather than triggering immediate dovish. For real estate investors watching DSCR loan rates, this meant no additional relief beyond the early January low. The Fed's waiting. Why June matters for your wallet. Now, here's the third piece most people are missing. Federal Reserve policy expectations are keeping a lead on how low rates can go right now. With the Fed holding the federal funds rate steady after those 2025 cuts and markets not expecting movement until mid-2026, long-term treasury yields and mortgage rates are trapped in a tight range. This on-hold stance limited further downside in DSCR loan rate and non-QM mortgage products despite strong demand from investors trying to capitalize on those early January rate lows. If you are financing rental properties, understand that we're in a waiting pattern until economic data either forces the Fed's hand or confirms their patience was justified. Rates recap. Barely a blip on the radar. Now, let me break down what this means for your wallet. The 30-year fixed mortgage rate started the week at 6.01% on Friday, January 9th, and ended at 6.04% on Friday, January 16th. That is a net increase of just 3 basis points, essentially flat. DSCR loan rates moved in lockstep, staying roughly half to 1% higher than conventional rate, which puts most DSCR loan rates in the mid-6 to low 7th rate this week, depending on your property debt service coverage ratio and loan structure. Your move, lock now or gamble in June. Should you lock DSCR loans rate now or float and wait for potential Fed cuts around June? If you have got a deal on the table and rates in the mid-6 range work for your cash flow, locking now protects you from any surprises. But if you can afford to wait and your rental property acquisition timeline extends into Q2 2026, there is a reasonable case that rates could drift lower if inflation continues cooling and the Fed signals cut. The risk, economic data could swing the other way, pushing rates higher before they go lower. On summary, mortgage rates held steady near 6% this week as lender capacity constraints and Fed policy expectations offset cooler than expected December inflation data. And just like that, this is already all news. Thanks for watching. If you found this video helpful, give it a like and subscribe for more expert insight on real estate investing. If you are ready to take the next step or had questions, call or text me 718-300-3503. I'm here to help you understand the market, find smart loan options, and turn today's challenges into tomorrow's cash flow.
If you want to learn how to use financing to grow your portfolio, check out my DSCR Loan Tips and Tricks playlist. Inside, you'll find powerful strategies, lender insights, and real-world tips to help you close more deals and maximize your cash flow.